Good morning, guys, and welcome to today's edition of the London Session Open. Today is April 30th, 2020, and it's 9:37 a.m. in London when I'm doing this market update. We're going to take a look at the markets. There's definitely some interesting moves happening. It has some very nice moves in markets like the DAX, FTSE 100, even the CAC 40. People getting all excited about stock markets again. And if you've been following me over the last few weeks, you know how we've been bullish. And yesterday we talked as well about some of these markets heading upwards. Actually, 2 days ago, I think it was. And I even did an article on that on Investing Cube. So I hope, guys, you've been able to capitalize on the moves we're seeing right now in the markets. So we're going to talk about that because I do understand it's conflicting for some people understanding what is actually happening. You know, we had some bad data from the US and stock markets still go upwards and people don't understand that. So I'm going to talk a bit about that. Of course, we're going to cover things like the Euro USD, GBP, USD, dollar, yen. We're going to cover crude, we're going to cover gold, we're going to cover DAX and the S&P 500 as well. So we have as well, if you have any questions, you can just put them there in the chat box. So in the chat box this morning, we have Maurizio Oliveri. Good morning to you, sir. We have as well Stefan. Good morning. Yes, sorry about yesterday. Yeah, my son rushed into the room and we had to cut things short. Hopefully it's gonna be okay now, and we're gonna avoid that. Okay, yes, so if you put your question in there, Stefan, today, then we can look at it, hopefully. All right, so let's begin, and we're going to begin by not taking a look at cryptos, but let's talk a bit about the German DAX then. So the German DAX, over the last few days and weeks, really, we've been bullish, and the very last good setups was to buy down here, to let it go up here, and then we talked about breakouts, and we did have some breakouts. Personally, about the FTSE 100 and the French stock market, and we had some very nice moves, and the market went higher in those markets, but even the German DAX went higher. And looking at this today, you know, we went upwards. We even continued to add to profits overnight, and I personally think the market got a little bit greedy there because we don't even have a correction, and they keep on adding to the profits. So I think from a purely technical perspective, it was a good idea to book profits this morning, maybe before the market went down a bit. Now, if you look at this today, you still have, you know, people will call this, this was some sort of a triangle at the end of the day, even though, and I was trading this like actually we can't treat this as an ascending triangle, but there's a ton of ascending triangles in, say, the German DAX, sorry, in the FTSE 100, CAC 40, a bunch of other markets as well. But you can definitely call this double top, sort of, and then you have difference here. I know I'm not following the rules strictly now. I'm probably gonna get crucified for this if I could, which I won't, but you get the point, right? I still think we can go upwards. Like, if you just look at the difference here, I think we can go upwards, and I think we can reach those levels. But we are in a situation, maybe we're here, right? For example, here we push to the upside, went up, went down, and then we push up a bit more. So the difference from here to here was 16%. The difference from here to here has been 10. So maybe we're gonna get a bit more, and I do think we will get a bit more. But if one is not already long, then buying here right now does not make sense. So I'm gonna wait for a bit of a pullback, and for now, if we go down to the breakout point, that would not surprise me. I mean, we were trading there yesterday at midday, so we might do that. Looking at this today, though, it's really struggling to trade much lower. So maybe we'll go a little bit lower, maybe 10,940. But for now, I'm gonna leave this level here and then let it come down. And if it comes down, we can probably get involved again, and then we target that high again. And looking at this now, I think we can even tighten this up a bit. So I will be bullish above 10,495. And again, we might not get all the way down, but I think we should be able to get down to maybe 10,950, and then we'll see what happens. If we just go down a little bit today, then maybe tomorrow we can just shift things to the upside. There's no harm in doing that. And the alternative is that we start to create some sort of sideways price action here, and then we just go bullish on that. S&P 500 as well is bullish, and it's recuperated quite a significant amount. So if we take fib from the very low to the high, we extended above the 61.8% correction level, and the 61.8% correction level was the level I was talking about when we were down here. Why did I say that? Well, because I know it's super simplified, and if I had all the tools and all the time in the world, I'd probably do more sophisticated analysis. But the way it looked like, if you look at China, they were at a peak of, they were like at 100 just before Christmas, and the 100 around the New Year. And the reason for that, I think, is just all factories and everything, which is going 100% over there because of the Christmas period and all the stuff we buy in the Western world. And as well, you have the Chinese New Year kicking in by the end of January and stuff like that. So I think there was a bit of an overdrive there. And then what happened is that on the back of the shutdown, the economy obviously slowed down significantly. But then, at least it was about a few days ago I looked at it, but the economy had recuperated. So it was at 62%, 65% of capacity compared with the sort of typical 100. And I know it's not 100% true or correct to do this, but I reckon, all right, if when the market was down here, if the economy would bounce back 60% to where it was before, then maybe we could do a 60% correction here as well. And that's where we are right now. We are here right now. And it just continues to go higher here. And let's talk a bit about what happened yesterday. So I was looking at Twitter, and some bears I know and I follow. I know them as well because some of them are even my friends from the past where I used to work for before. But one said, put like, oh, we have a contraction, we have a recession, but stock market's going upwards. This market is sick or this market is weird. That's how I understood it. And then you had a lot of people just commenting on that. However, though, the data for the US GDP was for the first quarter, right? It was for the first quarter. So what happened with the stock markets in the first quarter? Well, the S&P 500 declined with 36%. So it's not that the numbers didn't influence. It's just that the numbers are from the first quarter. We're now going to head into the 5th month of the year, and effectively you already recovered 2/3 of the second quarter. So we can't be trading the markets today based on what happened in January, February, March, right? So that's the issue here. Well, we're definitely in the second quarter, right? So that is the issue that we're looking at. Some people look in the rear view mirror to make decisions of what's going to happen in the future. And again, as I said before, we know this was because of the virus. We know as well that it was because governments told everybody stay at home. And you got some 26 million people lost their jobs. Maybe this time around, initial jobless claims is going to show that maybe another 4 or 5 million people lost their jobs. So you have some 31 million people that lost their jobs. But what's going to happen when they open up again? Well, maybe half of these people get jobs back again. So you have 15 million people just getting a job. That's a lot of people. You're still going to have some people left there that are not going to get back their old job. But we're going to recuperate. And that is what the market is pricing in. And that is why we'll continue to be bullish. And then don't forget that the governments and central banks are pumping so much money into the system. Why? Because that's where they were elected to do for there. If they don't do that, they're not going to get reelected. Are we going to have problems down the line? Yeah, of course we're going to have problems down the line. But what some people are missing out is the following. You and me might die and not live more than 100 years, right? Probably 85, I think, is the typical. But governments don't die unless they have some revolution to them or something similar, war. So realistically, just, I don't know, but let's assume the US government, for example, or even the Italian government, is going to be around for another 300-400 years. That's a long time to have to pay back those debts. If they would socialize the debts, which is really, or socialize the problems, which is what they're doing. So eventually, I think things will be sorted. And if they don't get sorted, people go bankrupt and governments go bankrupt, and then they start fresh. And that obviously is something totally different. But people survive. Anyway, bullish trend in the S&P 500. I wouldn't be buying up here. I will buy at 2908 if possible. Next major level is 3114. And if we go back, I think people are going to be buying. Keep an eye on German DAX and all these markets. Ideally, everything goes back, and then everything sort of comes close to the buy spots, and that's when I would get bullish. Something that people as well has been seeing is that crude oil is trading at $14 a barrel right now. So that's going to be a huge boost for our energy consumption. It's going to be much cheaper and tends to boost the world economy. It's like a huge tax. So what's happening here with crude oil prices then? A few days ago we said sell here for it to go down, and then I said look to sell here at 1543, looking for this to go down. It's deep in the sell zone, and the market's not fully reacting the way I wanted it to react, but I will continue to be bearish, and as long as you're below 1896 I will be bearish. Then we can go down to 15, maybe 1250, then eventually 10, then eventually 11, and then we'll see what happens. If we take out the high, we can go a little bit higher, then maybe a little bit lower, and then a little bit higher, but then we'll see what happens, because you have these many downtrends that are coming in play here, and it's going to take some time before this is sorted. As well, crude oil inventories are rising sharply in the US, and they haven't opened yet. They will open maybe in 3 weeks from now, hopefully, maybe 4 weeks from now in the US they're going to open again. So by then maybe consumption is going to pick up. But I did a special webinar on crude oil yesterday, and the US, what we call it, Energy Information Administration, I think it's called, they said and estimate that demand for crude oil has declined with 30% in the US. So that's a significant drop. And because these contracts need to settle into the physical market, and because there's already quite a lot of substantial, I mean, I think capacity Cushing was at 76% on April 17th. And there's a situation here where you can easily have this being under pressure until they open up again. And so I think we can probably go down, and then maybe for the next month in July, if they open up, maybe by then we could probably have better support in the market for crude oil. Let's take a look at gold. Okay, here's gold. So we're up a tiny bit, and the idea was to buy here at 1691, but I pushed this up after we reached these levels, and then yesterday we didn't go low enough to reach those levels. I'm gonna leave this unchanged. I'm not gonna make any changes here. What's quite interesting though is that we're creating a bit of an ascending triangle with these highs, that trend line there that I just removed. So we do take out something like 1741, we can potentially go to 1800. If you look at the Euro USD, it's quite easy. There's nothing happening here. You had a false move a few days ago. Now we're going to the upside and we're trying to take out the high. You do have the ECB rate meeting coming up today, and that's going to be a market mover. The people anticipating them to hopefully start to buy junk bonds. That's going to support Italy and other companies that are struggling because of the shutdown. As you have companies that are fully good, but because they can't make any business now, they're not getting the income, and they're firing all the people because they can't pay the salaries because they're not making any money. So what happens here, if the ECB is allowed to buy junk bonds, then these companies can issue debt, and they issue debt, and then they can borrow money to overcome this bad period. So that is, I think if they go ahead with that, we can see a bit of a boost to the Euro USD. Maybe we can go up to 109.50, because I think that's going to lower the risks for the Euro area and the Euro area integrity. But I don't really think too much is going to happen. I think this needs to consolidate further. You have that big high and that big low. The whole thing market here is actually just not doing anything, and I would not allocate a single pence to trading this market right now the way it's trading sideways. Here's another one which is also trading sideways. Super difficult. Nothing has really happened here since April 27th. Have some amazing moves in stock markets, some amazing move in crude oil markets. You even have amazing moves in cryptos. There are better stuff right now than Forex. So here as well, I would strongly not do anything here, but if it does come down to 123.20, I think some people might look to buy here. You might still also be in the process of creating a major head and shoulders with a head left and a right shoulder, and the break to the downside can potentially take things down lower. You have the dollar yen. The dollar yen is something that I said we can probably focus on. You got yourself a double bottom. Potentially can also be interpreted like an ascending triangle. If you do it like that, it's an ascending triangle. And difference from here to here gives you a target. You can also take difference from here to here and gives you another target. We had the break to the downside, but it's definitely a bit conflicting here. And it's conflicting for the market because you have stock markets rallying higher, and at the same time you have this going lower. For now though, technically it's still bearish, and I'm gonna leave it the way it is. As long as you're below 107.78, then there's absolutely no reason to make any changes. All right, we have a few questions, so let's take a look at them. We got Stefan talking about dollar CAD. He's still short for 136. Do I think it's gonna make another break lower today? Well, that's really difficult to say, but we're very close to trade lower. So I removed the annotations for that other head and shoulders. So we had a head left, potentially a right shoulder building. We also had the smaller head and shoulder, which is the head left and right shoulder, and we had that break, and that so far is going good. That pattern as well has a target of 137.11. We can go down, and I personally think it's a bit surprising that it's actually going down, given that crude oil still remains at the low. But I guess the optimism is pushing through the dollar as well. People selling the dollar effectively. What can we do here then? Well, if you're not in the market, I would not. I would not do nothing here. But if we do take out this low, it might be a situation where we take out the low, and then tomorrow maybe go up a bit, and then sell in the correction. That's what I would do here in this market, because we're still within that range. And people bought here on April 13th, and they can easily do that again. Again, this is a bit of a sluggish market. Remember, I think I told you, Stefan, to look at CAD Swissy. And CAD Swissy, I think when we talked, I don't remember exactly because my memory is like a goldfish. But I do know myself, I've been watching this for quite some time, because you had this head left right shoulder, and then we had the break here. I know we didn't talk about it with you at that point, but I did share it with some of my clients, and then the idea was just been to buy down here. And here you have a nice functioning trend, at least, where you have that move there. I would definitely book profits here. And if you look at this today, this is the major low down here, but you have it's a 4-hour chart, by the way. You have this low here, and I'm not sure exactly, but if we will come down and then probably upwards, here you have some more decent momentum. And it makes sense as well, because if you're bullish on stock markets like I am, then the Swissy should weaken, and that's what we're seeing here. And we still have that unmet target. I think we can still go up, but you have this big move, and ideally you will be looking at a dip. Oliver says, unfortunately, many brokers don't allow to open new positions in US oil since the breakdown of last week. And we have HTM Moyo saying good morning. Good morning to you. Thanks for joining us. I understand that, and I think I think it's actually quite good that they block, because they're protecting themselves and they're also protecting the retail trader here. Of course, if you're trading with an FCA regulated broker, you don't usually have any issues, because you can't lose more than when you have in your account with an FCA regulated broker. But you have interactive brokers. I think they lost like 88 million, and people try to buy dips here, and it's such a fast moving market, and I think the brokers, they can't guarantee to get out, so that's why they're not allowing you guys to trade. But I did a special webinar about crude oil. I'm going to upload it later. I'll probably put it here or something so you can watch it, much like this one. and you can check it out. But I do think we have a situation where you can buy some stocks. I think some of the American oil companies were doing some interesting patterns. Just need to double check that these oil companies have the money and the buffer to survive. I think they all do, but you should always double check that, because the benefit of buying an equity is that with the equity, as long as the company doesn't go bust, you can hold it on forever. So you can buy it at the lows, and if you are not very good with markets, not you especially, but the general person that is not very good, and I'm not very good either. If we extend the length of the buying, the investment horizon, the likelihood that I will eventually swing to profit is higher, right? And that's why people are more successful at long-term investing, and it's much more difficult to do short-term investing because you don't have time working to your favor. And some of these companies, they have actually bottomed out. So they did bottom out, even though crude oil did not bottom out, because these companies, well, they can take advantage, some of them, but not all, they can't take advantage of the low prices. So they'll effectively buy crude oil at cheap prices. Actually, I'll take that back. They produce oil at very high levels, and they might not really get what they want, but they do have, I guess, access to some sort of storage. They can play around with the futures, I reckon. So at least from a stock market perspective, those shares look to have bottomed out, and that's maybe what one can focus on. Okay, I think we're going to wrap things up. Guys, before we finish, I want to show you guys some stuff. So we have the Investing Cube Forex free premium Forex trading course. You click on that button and you can buy it for $7.99. It's a course I've done. So if you like this daily market update, you can check it out. It's the same ethos, same sort of thing. Cover far more strategies, where to buy, where to sell, and you can get it for free with an ATFX account. You can also sign up for mentoring. So we do offer mentoring for people that sign up with ATFX. Usually you need to have what's called an edge account, which is like a minimum deposit of, I think it's 5,000 euros, 5,000 pounds or so. But because this is something new, ATFX itself is quite a new broker in Europe, and also in the non-Asian world. So we are extending this to anybody that opens up an account. And effectively, you do, as long as you create an account, you get the premium course, plus you get 2 hours either with me or with any of the other guys here. You receive an email, and in that email, it shows you instructions to go ahead, and that will allow you to become a client of ATFX. There's no cost at all, and then you can have access to all this. Okay, guys, we're gonna wrap things up. Maurizio, HTM, Moyo, Stefan, thank you so much for joining me in the chat box. Before you leave, don't forget to hit the button there. Maurizio, and HTM, Moyo, Stefan. Don't forget to hit that like button. And as well, if you're watching the recording, don't forget to leave a little comment to help spread the word about this market update. Have a great day, guys, and I'll see you guys tomorrow. Thank you.